Truth of the matter is, we lie to ourselves a lot. Have you ever told yourself you're gonna get gas in the morning? Yeah. That's a fun one. Oftentimes, we tell ourselves these lies that we're gonna do something later, and we either end up never doing it or doing it too late and then kicking ourselves in the butt because we wish we would have done it sooner. Investing for our future is another one of those things that a lot of us like to put off. We tell ourselves, we'll do it later, we have plenty of time, and the next thing you know, you're 55 and you've got nothing. Seriously. Happens to a lot of us. And interestingly enough, one of the biggest regrets people have when it comes to investing is they wish they would have started sooner. Because the sooner you start, the sooner you can take advantage of the magic of compound interest. And I know what you're thinking. The market's been pretty volatile. Heck, the world's pretty much going crazy. And if you're still wondering if you should start investing, the answer is, and will always be, yes. So here are 4 steps to getting started. The first step is you want to know why you're investing. Are you investing for retirement? Are you investing for health expenses? Maybe even college expenses for your kids? Knowing why you're investing is going to help you determine which account will work for you. It's also important to know why you're investing so that you can set concrete goals and then work backwards. For example, let's say you want $1 million for your retirement. You can use tools like investor.gov to plug in your numbers, such as how many years do you have until retirement? How much do you want to save a month? What do you think your annual interest rate is going to be? Don't be afraid to leverage tools such as online investing calculators to run your numbers so that you can figure out how much you'll have to save each month to hit your goal. So now that you know why you're investing and what your goals are, the next step is to go and open that account. An investment account can be opened up with a brokerage, which is basically where you go to buy and sell stocks and bonds. Some examples include Vanguard, Fidelity, or Charles Schwab. At a brokerage, you can open up an investment account that aligns with your goals. For example, let's say you're going to Fidelity. At Fidelity, you can open up an individual retirement account and a health savings account. And if you're already maximizing these tax advantage accounts, you can open up a standard brokerage account. Think about a brokerage just like your bank, where you can open up a checking account or a savings account. And similarly, at a brokerage, you can open up these different types of accounts. Step number 3, now that you've opened up your account, it's time to fund it. It's just like opening up a bank account. So once you open up the account, you want to fund it. And the great thing is that you can also set up automatic deposits. Okay, so remember how I said that opening up an investment account is just like opening up a bank account? Well, I lied just a little bit. You see, when you open up a bank account and you fund it, you're pretty much done there. But with an investment account, when you open it and you fund it, you're not done there. So don't make the mistake of stopping here. Once you fund the account, you actually need to invest that money into assets like stocks, bonds, ETFs, or mutual funds. Determining what assets to invest into is a pretty big topic, which I can cover later. So if you're interested, please let me know in the comments. But in short, a really great start are low-cost index, ETFs, or mutual funds. So to sum all of that up, to start investing, first of all, start by knowing your why and setting some goals. Second, open your account. Third, fund your account. And finally, actually take that money and put it into assets like stocks, bonds, ETFs, or mutual funds. That's it for today. If you like this video, like and subscribe for more content. Thanks for watching. See you next time.